Hello everyone and welcome to Property Point. I'm Tony Kay, I'm the editor of Eureka Report, and as always I'm joined by Nerida Conisbee, Chief Economist from REA Group. Hi Nerida, how are you?
I'm well, thanks for having me on.
It's a pleasure, always a pleasure. Now Nerida, as usual, I thought it best just to have a bit of a chat about what's happening in the property market at the moment. So what sort of trends are we seeing?
Well, it's a continuation of trend. The market's still very strong in Sydney in particular, also in Melbourne. We recently had, at the end of November, the Super Saturday auction day, and on that day we typically see the most auctions taking place as it's the last sort of big day before the end of the year. So that was a very strong day in terms of clearance rates. We're hitting sort of 80% in Sydney, Melbourne getting very close to 80%. I think though what was quite different this year though was that the number of auctions for Super Saturday weren't that different from last week or even the week before. So we still have a very strong demand from people wanting to buy, but we don't have that same level of supply coming in. So we really still have a shortage of stock. Elsewhere in Australia, conditions are obviously far more variable. So Perth still seeing very low levels of demand. I'm still hearing variable views about Perth that we're still not at the bottom. When we have a look at at residential property, we are certainly seeing some signs in some suburbs that prices are growing again, but overall, we're still seeing drops in house prices. Tasmania, lots of demand in Tasmania. So Tasmania is coming up very strong on our property demand index, really driven by affordability. But we're also starting to see properties in Tasmania popping up in our most clicked properties. We regularly track the types of properties that are most clicked on our site. And a few weeks ago, we actually saw a property in Tasmania coming up as number one. So that never happened before. Like typically, it's a Melbourne property or a Sydney property, but a Tasmanian property in Hobart came up as number one.
Yeah, I've heard that there's a lot of interest in the Tasmanian market, even from overseas. Is that what's showing up in your data?
Yeah, look, a little bit from overseas, but it is primarily from Sydney and Melbourne. We do see a lot of people browsing Tasmanian properties from both of those states. So Tasmania is the only state now where a single person on an average income can still afford to buy a house. So, I think there's a lot of interest from that perspective to get into a pretty affordable market, but also for younger people. So we are seeing the popularity of rent vesting seems to be increasing, that a lot of people want to live in Sydney because they live there, because they work there, same as Melbourne, but really are getting priced out of the market and having to look elsewhere to get into the property market.
Your recent article for us, Nerida, on the apartments market, and particularly whether it's still possible to buy an apartment in the CBD or whether it's wise to buy an apartment in the CBD, that got a lot of interest, and there were some very interesting points in your article. So maybe we could just recap on what you said in that piece.
Yeah, sure. I mean, look, the apartment market is the CBD apartment one is one to be very cautious about. There is a lot of development taking place, although there are still some properties that probably are still worthwhile looking at. The areas to be really concerned about are Melbourne and Brisbane. So Melbourne CBD, 18,000 apartments under construction. Following that, there's around 40,000 apartments still in the pipeline with planning approval. So, a huge amount of stock coming onto the market. Melbourne does see a lot of development, but this is really unprecedented. Brisbane is similar, obviously not as high in Brisbane, but then Brisbane doesn't typically see the same level of development long term. So 10,000 apartments under construction in Brisbane. We don't have that same level of number of apartments with planning approval following that. So Brisbane is probably not going to be as well supplied as Melbourne, but certainly a lot from a historical perspective. So what this has meant, we're starting to see price drops across all capital city CBDs. I think in places like Sydney, that's a little bit unfortunate because Sydney hasn't seen anywhere near the amount of development as we've seen in Melbourne and Brisbane, but I think it has really been caught up in this negativity towards apartment stock. So overall, Melbourne, Brisbane, I would be very cautious, about buying and particularly buying off the plan. Sydney, you probably could be a little bit less cautious, and I think Sydney has a bit more longer term potential. If you're really keen on Melbourne, though, if there's some really, if you're looking at very unique apartments, you could do quite well. So sort of a warehouse style apartment, or something in an older, perhaps Art Deco type building would probably still do quite well. Similarly, if you're wanting to live in Melbourne CBD, you would do very well. So because we're starting to see prices drop. We are starting to see a few bargains enter the market. So within a few years, I think Melbourne will, you'd be able to pick up something at a pretty good price. So great for affordability, really good for affordability in Melbourne, but obviously not great if you're an investor there and you're wanting to cash in pretty soon. Not great for banks, obviously, if there are a lot of people who decide not to settle on those apartments. It will be pretty well for the developers from that perspective, but also the banks if the market becomes a little bit riskier. So yeah, it is a market you do need to be very careful of when having a look at it.
Yeah, I'll just have a look around the skyline of Melbourne and see so many cranes in the CBD in the apartments area, and I'm thinking that there's a huge amount of stock obviously to come onto the market. It's going to take a lot of time to absorb that, but for investors, obviously, if the market does dip down the track, there'll be some good opportunities for them.
Absolutely, and if you consider Melbourne, Docklands is a really good example that you can get an apartment on the waterfront for a relatively affordable price. And if you have a look at, say, Sydney, trying to get a waterfront apartment, obviously very different outlook, but it would be out of range for pretty much many, or not pretty much all, but many buyers. But Melbourne, you can and you will continue to be able to get pretty affordable apartments.
Well, thanks so much, Nerida. It's great having you in the studio again today. I'm Tony Kay for Property Point. We've been talking with Nerida Conisbee, Chief Economist of REA Group. Please join us next time. Thank you.